off or
You go
then
for it.
jump
Yeah.
in? Yeah. So we spoke a few times earlier this year about different topics on not necessarily to realtor groups, but some different um, realtors independently, but some of the things that are working for us. And we thought we'd just bounce on the call to kind of share things that are working within our group. And Cyrus is, as much as I've learned from him, he learns from me and vice versa. So um, we'll start by saying this. Our process when we spoke in person at your office hasn't changed pre-COVID in terms of our process and with our client intake of our applications on the front end is very consistent. And with that becomes very easy to kind of get the approval. And it really comes down to the documentation that we're asking with the clients up front in terms of their income. And that process does not change, and being consistent with that process pre-COVID and even during COVID, and how we got the deals approved so fast. One of the things I think Cyrus is going to speak on is about just COVID. Some people were on CERB income, and basically, if they were affected by that type of being off for a little while, and what does that mean in today's world, and how to get people financed? Cyrus, you want to finish that, or?
Yeah, we can just quickly touch on income, because a lot of things have been changed due to COVID for clients who have businesses or clients who have jobs that they could have been laid off due to closures or COVID or whatever it might be. So the banks have really kind of started honing in on questions around how has your income been affected by COVID? How have you been laid off? If so, for how long? Obviously, if you're in a business that is impacted by COVID, there's a little bit more risk for them to finance you. So if you own a restaurant, they're a little bit more on their heels when it comes to financing, where, yeah, you might be open right now and you're actually not open right now, but you might be open at this particular time, but what's going to happen if you get closed down again? So if you're really kind of strapped for cash, if you're not a strong profile, they might be a little bit more, I guess, picky on if they approve or not. But what the banks have started to do, so we use on income for people who are self-employed or commission or hourly, we typically look at a couple years of an average. So banks will always look at the last 2 tax years and average your income based on that. Well, a lot of people's 2020 tax year is not going to be great because they might have been off for half the year, or they might have been laid off or whatever it might be. So the banks have come out, and this is the first time they've ever done this, but they say, you know what, we'll actually look at the last 3 years. So we'll look at 2018, 19, and 2020 and help derive a more accurate representation of your income, because obviously if we just look at last year and the year before, it's not going to be accurate to what you've been earning the past years, obviously just due to the closures. They also look at the year to date on the pay stubs to find out if it matches up. So if for whatever reason your year to date is really low, they're going to really be more picky than they used to be in the past. Why is it low? Did you get laid off? Is your business closed down? You will not be able to get a mortgage if you're currently not working due to COVID. So if you're on CERB income, it's not an acceptable source of income. The banks will not use it. Yeah. If you're on CERB income in the past, they don't take that into consideration. So if you claim $6,000 of CERB last year, that does not go towards your average of your income. And really it's if you're in a job that was, let's say Irving was just shut down for a COVID exposure, that's a job though that's pretty steady, and as long as you're back to work and you resume your normal hours and your normal salary, it's generally not a problem. But if you're in an industry that is itself heavily affected by COVID, then there's going to be a lot more questions. But if your workplace was just shut down for 2 weeks because there was an exposure, it's a little bit different. So these are all the challenges that we've been faced with for clients and industries and people trying to get approved for mortgages based on their professions, right?
Yeah, just to add to that, so it's certainly you kind of touched on it there. It's really if they're in a service type business, and how if they're affected by that, if they're not off, if they're off work, but if they're an hourly employee, they're really looking at that. Some people have always counted on overtime, and that's really not been consistent these days. So anybody that's in a service type industry, they're really kind of looking at that. The other important piece is if it's just one income, and if it's an hourly wage person versus a salary, and kind of looking at that, and whether or not the employment is stable. They just want some reassurance that, they're not putting somebody in a financial situation. So that is our job, to be asking these tougher questions. And we might be a little bit more paper heavy than we were in the past, but it's made our presentation to the lender a lot better, so they can underwrite it and approve it faster. So.
Yeah, and I guess that also ties into out of province buyers, because we have been dealing with a ton of people from, not so much in Nova Scotia, but from Ontario. Surprisingly, I've been doing a lot from Quebec, BC, and that also ties into, they want to move here because maybe they don't have to work from their offices in their province. So they're saying, hey, you know what, I can sell my house, move here. The banks need confirmation that you can work remotely. So if you have out of province buyers that are looking to move here, always the first question we always start with is, what is the income going to look like when you get down here? Are you going to be able to continue to work? Are you going to be able to, well, if they're like, no, I'm going to come down and look for a job, they're not going to get a mortgage until you have a job. So those are the few things that are, a lot of employers and a lot of banks are okay with the fact that they're going to be working remotely, but they do need some kind of confirmation that you are allowed to work from home in a different province. And that is something that's kind of really important. The other thing is signing electronically. I mean, we've done hundreds of mortgages in the last 12 months. I've met 2 people in person. So really the world for us has changed, where we're allowed to use DocuSign and Dotloop and Sign Now and all these platforms, where, beginning of 2020, no bank or lender was accepting electronic signing. You can't do that, right? It's against the regulation. So that has helped our business a lot. So it's also helped out of town buyers, where we don't actually have to meet them physically in person, but we can do the process with them a lot easier. And then obviously for lawyers coming into doing Zoom calls and Zoom meetings and not having to physically have the client sitting in front of them. But that's pretty much, it's helped our business in that sense, because we can do an easier transaction for clients by doing everything virtual for the most part. Jack, if you want to touch on that at all.
Yeah, it's, if we didn't have COVID, this change of digital signing in our world, you guys had it much before us. It probably wouldn't happen for another 5 years. I think one lender had it just on the commitment. We have it on their entire signing package, which includes even the void check form, which had to be signed in ink. But now the world has changed, and adopting that signature has speed up our process. So Cyrus was saying the other day, he probably wouldn't have been able to do the number of transactions, and I would agree the same. We wouldn't be able to do the same amount of transactions that we're currently doing if we had to see every person in face to face. It's almost impossible. And it just speeds up the process. And we send the commitment package to the client in advance, so they know what they're signing, and then the digital signing package comes out. And it's, much like your world of Dotloop, it's very click and sign, and it's seamless. It's, everybody's trying to manage their time. And it has improved our efficiency with the client as well. So other than that, it's going quite well on the digital signing packages stuff. But yeah, remote, that's the key word. As long as they're working remotely, which is they'll do a verbal verification to that just to make sure that they have some confirmation. But that's going really well.
We still are very much, we can get lost in the digital world a little bit. So we do still want to make sure that we're not just emailing and texting clients. We do always like to do an intro call. We do always like to pick up the phone and call the realtors and keep them in the loop. We do like to at least, because for us, it's really important to build a relationship with the clients and the realtors. If you just email all the time, you're just another person that they don't know who you are. They never heard you, or they won't remember you, right? So we do still like to keep a good personal touch the whole process, but we don't have to meet anybody for the most part in person. So it's been a lot easier and we give clients sometimes the option. I can't remember the last time a client has taken the option. They were like, you know what, let's do everything phone, email, Zoom call, whatever you want to do. And it's been pretty easy from there.
And that's great to hear that. That's great to hear that, guys, because as you know, we're figuring out quite quick. Average day on market's 2 days, right? So we do need the efficiency aspect to be, and with COVID, it's almost like it's all worked out a little bit. So looking the silver lining, that's a really great thing to hear. Yeah.
Well, the funny thing is too, I was just the other week, I was doing my own papers for a car purchase, and you can't sign those electronically. So I still had to go in and sign everything. So it's funny that now you can do a mortgage, which is a much bigger transaction, with the electronic signing, but you still can't go buy a car without physically signing an ink. So it's been a great addition to our business. Obviously, it's not been a great addition to how we do day-to-day life, I guess, but it's helped again the business in that sense. But I think, Jack, if you want to touch quickly on appraisals as well and just kind of what that's been looking like.
Yeah. Dennis, do you have a question?
Not a question, just more of a comment. I think it's so funny nowadays when you're talking about DocuSign and everything else, and how much over this last year we use it. And when someone doesn't use it, you're just like, why? Why?
Yeah.
Like the insurance companies,
Yeah.
my financial broker, like I'm just like the accountants, like just send it to me DocuSign. What are you guys doing?
Yeah. And you can't, and that's what I said. I said, you guys haven't adopted, like we're doing $600,000 mortgages and I don't have to see the client, but you have to come see me for a car loan. So it's bit of I think other industries haven't picked up, but maybe they'll follow suit, but it's hard to tell, right?
I think the mutual fund business, the financial planners, they're probably where we were. They're not there yet. Just trying to do you still have to go to the branch to do your first time home buyer withdrawal. They're not there in that process of, they still need that wet ink on that paper. So we'll see where that business trends. What do you want to talk about next in terms of the
appraisals, Jack? If you want to jump into what we're seeing there for the most part, or if you want me to start there.
I'll tag on to that and we'll talk about the pre-approval stuff after that.
Yeah. So just appraisals and turnaround times. Obviously it's been more offers, tighter timelines, all those different things are playing a factor into the whole, I guess, just pressure on getting deals done in a certain amount of time. Appraisals are really one of those things that are sticky, because if you put less than 20% down, if you do an insured mortgage, the appraisal is the responsibility of the insurer. So CMHC would order the appraisal, they book the appraisal. It's completely out of our hands. So when you're doing a 5, 10, 15% down, they are the ones that contract the appraiser, they pay for it, they book it, it's on their timelines. And it's been really, really slow and tough to get appraisers
booked.
we can't really do anything. But when the bank wants the appraisal, so when a client puts 20% down or 25% down or whatever, then it's up to us to book the appraiser. Then we can use our guys. We can use our relationships, leverage. I mean, we have great relationships with a couple of appraisers that will drop everything and get in there in a day's notice for us, right? Whereas if you call any old appraiser, he's going to tell you he's 7 to 10 days to book out, right? So we have some good relationships there to turn stuff around quickly. I have on exception gotten an insurer to give me an exception to use my own appraiser and pay for it and get it done quicker. But it's a rare exception. It was just one of those deals that we had a lot of backup offers and we weren't willing to, we knew the sellers weren't going to give us any time, so we had to do something. So we had that appraisal in and out done in 24 hours. So not the norm, but we do need to really set that expectation, because if an insurer asks for an appraisal, you almost become a sitting duck in a way. So you can do what we can and we do to kind of push the insurer along, but it's so out of our hands. So we do have to make sure that, it's getting to the insurer as quick as possible so they can submit the deal or get the appraisal ordered if they do need one. They don't always need one, and most of the time they don't. But I would say out of one out of every 10, or maybe 2 out of every 10 will trigger an appraisal. So it is one of those things that we do want to make sure we get in front of. And then there's also 2 different types of appraisals. There is a desktop appraisal where they don't physically go to the house. There is also a full appraisal. I actually really do like desktop appraisals, depending on the bank and the lender, because it can get done a lot quicker. And generally it's a range that they use for a desktop appraisal. So they'll say the home is, if the home, you're buying it for 550, maybe the appraisal comes back and says, yeah, the range is anywhere from 525 to 575. That's great, right? It falls within the range. It's no problem. You're good to go. If for whatever reason a desktop comes in low, we can always ask to do a full appraisal. We have had the situation where a desktop came in low because the inside of the house was completely renovated, and obviously with a desktop they weren't able to see what all the upgrades were. So in that case, we had to order a full appraisal. But a lot of times desktops are a lot quicker. They get done a lot more efficiently. So we do leverage those if those are an option. But for certain properties like rental properties, if the client's not living in it, always going to trigger an appraisal. that's kind of one of those things that you just can't get around. It can't be a desktop, it can't be a drive-by, it has to be a full appraisal. And it's been tough with tenants that are in there, getting them to kind of get out of there in time to get an appraisal in there, and all the rules around if appraisers can enter homes or not. So sometimes some appraisers won't even enter homes. They'll get agents to send them pictures of the inside. So we have seen that, or they just pull the pictures off of MLS and they just do a site inspection of the outside. So there is a few things there that has been challenging the last 12 months, but I think we've really been able to kind of, lean on our relationships to get stuff done quicker. But again, it's a battle for, I'm sure you guys have ran into it, right? Yep.
Okay. Dan, to answer yours, no. Like fresh out of the womb of real estate licensing. So no, haven't run into it.
Yeah.
Yes.
I'm sure you will, and I'm sure you'll be on both sides of it. I'm
Yeah.
sure you'll get the side where the agent's calling you asking for an extension because they need to do an appraisal. The
Yeah.
good thing is that if it's an insurer asking for an appraisal, at that time, the deal is pretty much approved because they're not going to order an appraisal. They're not going to pay for that to get done, just for
Right.
them to cancel the deal on something else. So
Okay, and that actually leads to the question, my actual question, which was, under what circumstances would a lender, for example, say, yeah, a desktop appraisal is fine, and we will approve based on not anybody going on site to see it, or under what circumstances are they going to say, no, we are not doing a desktop, we are absolutely doing an on-site, so that when I'm talking to clients, I can say, okay, so they've asked for appraisal, but we're going to see if it's a desktop appraisal or not. And it's probably in your better interest to go this way or that way. Like you're saying about upgrades, like I'm wondering in terms of talk track, how do I interpret that?
it's tough to say. I mean, most banks use a like a third party appraisal system that's used all around Canada, and it's called Nationwide Appraisal Services. And that system itself will actually trigger what kind of an appraisal we can order. So really just have to kind of lean on the broker or the banker to let you know what kind of appraisal is going to be needed in this scenario, and let us kind of advise on what the turnaround times might be for that specific appraisal. Banks a lot of times as well, like for example, I do a lot of my business with Scotiabank. Scotiabank has a really sophisticated auto valuation system. So they will run it through that system first. So what they'll do is they will approve the deal and spit it into a system that gives them like an auto evaluation. And if the value sticks, there's no appraisal required. If the value doesn't stick, then you need to do an appraisal. So that's always been really good because typically 20% down, you're going to need an appraisal regardless, depending on whether the bank itself can auto evaluate or you need to order a desktop or a full appraisal, right? So a lot of banks do have that system where they do auto evaluate a deal, but I would say maybe 3 or 4 out of every 10 don't stick. So then we do need to order a full appraisal. The other thing as well is sometimes if timelines are really, really tight, we can't necessarily wait for the bank to approve the deal and then run it through their auto evaluation system, because if they do that and it comes back and it doesn't auto evaluate and then we're already 4 or 5 days into the process, it's going to be tough to get an appraiser out there and finish it in time. So typically sometimes if we know the clients are strong, I'll order the appraisal right away and just order a full or a desktop or whatever it allows me to do, and get that out of the way, whether it might need it or not. But hey, we got to do some stuff to kind of win a deal and make sure it gets done. So these are some stuff that we've been leveraging.
That's one of his tips, right? That is one of the biggest tips right there, that he's had success of getting the approvals back probably than any other lender or banker or broker in the city.
Well, it's also, I don't want to say we're overpaying appraisers as well, but we are sometimes saying, hey, like I called an appraiser last week and it was a Friday and I needed an appraisal by Monday. And he said, Cyrus, I got 8 appraisals to do over the weekend. I can't. I said, listen, I'll give you invoice me for an extra $300 as a rush service, get it done. He had the report back to us on Saturday night. So it's just about how do we get this stuff done as quick as we can, as efficiently as we can. But also, I mean, I always tell clients, I'm like, hey, if I'm going to make, because an appraisal is typically the cost of the client. If the client's going to pay for the appraisal right up front, I always tell them, I'm like, I'm confident this deal is going to get approved. If this deal does not get approved because of the financing, because of something with the pre-approval that we didn't do properly, then I will refund you for the appraisal myself. But we can't wait until the deal gets approved so that you know the deal's approved and then do the appraisal. We need to get the appraisal going if these are our timelines, right? Sometimes it's a non-issue, but it just depends on how we kind of structure the circumstance. If there's only 4 or 5 days for financing, then we have to figure something out to get it done super quick, right? And sometimes it's just being more aggressive than we're, I guess, clients might be used to, right?
Much the same as you guys trying to find out, again, an appraiser, or not an appraiser, a home inspector out there. And your challenges are trying to book those guys in your septic and well inspections. You guys are having those challenges. Meanwhile, like I said, if we waited 3 or 4 days for an approval and the approval came back, and then the next thing we know, we need an appraiser, that's another 4 or 5 days, and you guys are waiting. So what we did is kind of back it up and kind of started it right on the front end, if possible, with, as Cyrus pointed out, with this desktop appraisal. We'll try to go that route first, or try to get the auto approval with the lender. That is speeding up our process. But if not, we had this flexibility of doing these modified appraisals as well, where they're not entering the home, as he talked about. So it's whatever we can do to speed up the approval. Like you said, we're not waiting. If it's taking that long to get the deal approved, that's the worst thing that can happen. I guess one of the questions that comes up is whether or not we're, should we be putting that in the offer subject to an appraisal? I don't know. I haven't had any problem so far. We're just, again, back to our communication with our client and the realtor. If we're going to need one, we're trying to give as much notice as possible. We're not waiting till the last day. So these are good things that we've been working through. They're not, 100% perfect, but they are better than what's, if we waited, for sure. So
that'd be part of the financial, right? Anyway, the appraisal is part of the financial, so it's already written in there.
Yeah.
And a lot of times we also find that it's if a deal is tricky, if it's a deal that, we would try to communicate to you as best as we can before, like on a pre-approval. Hey guys, we think that there's potential of a problem of this, and this, right? And if a deal is very complicated, maybe there's a lot of moving parts, or there is some stuff that's just iffy and we don't exactly know what the lenders or the insurers are going to say. We always like to communicate that up front and say, hey, these clients are pre-approved, but here is a couple of issues that we see with the file that we won't know for sure until we have an accepted offer. Because any exception to a file is not going to get done on a pre-approval. Exceptions on files are only done on a live offer. So we try to set that expectation. Sometimes deals are going to take a little bit longer due to the nature of the deal. Sometimes they have to go through different hoops and different levels of approvals. So they sometimes take a little bit longer. So these are always things that we want to make sure we communicate and we're all on the same page, so that it's not, one of those things that all of a sudden a decline comes through and it's like, well, I thought this guy was pre-approved. How is there any problem, right? So most of the time clients are fine, but there is sometimes those clients that you're like, hey, you can write an offer. They can technically get this much of amount of a mortgage, but based on what we see, and the insurer might not like the file. And really in the last 12 months, there's some files that we've gotten declined from insurers this year that would have for sure gotten approved in 2019, right? Just based on where they are with the market and what they assess for risk and where they are in terms of appetite. It's not as strong as it used to be. So they are definitely a little bit more picky, and a little bit more, I guess, selective on the certain circumstances that they're willing to take on, right? So it has been a little bit of a different environment too.
Yeah, that's a big topic.
It's a lot to kind of, definitely a lot to cover. But I don't know, Jack, if you want to jump into pre-approvals.
Yeah, so I just to kind of start at the front end of that, for sure. Pre-approval. So you touched on a little bit, but here's the thing. We generally do the pre-approval to understand, we pull the credit, get the income up front, and understand what their max budget is, which is obviously ever changing, because now they're out shopping and the home that was 300 is now 350 or 400, or the 350 is now 400. So now we're trying to, before this call, we were talking, and how do we, we kind of manage this client conversation, because it's changing every week. They're calling and say, well, what can I afford? What is my absolute maximum? Here's one of our things, is understanding that if they want to get a pre-approval, we're going to see what they can do for the max. So for example, if it's 300, we're going to plug in 400 and plug in the taxes and things like that to make sure that they can go up to that certain amount of money. The other thing that we're doing with that is if they're going to write an offer, and this is where you guys come in, that understanding if their offer is going in on a certain place, is knowing what the property taxes are. That can make or break the difference on a particular file because some of these homes are going for 50 and 100 grand over list price. Well, the property taxes aren't as high. That can make the difference on whether or not they go for a $400,000 home or 380. I just had an example with one of the agents at your office. They were pre-approved at a bank for 380. Once I got a hold of the deal and I was like, they were going to make a new offer and we got the tax bill in, they were actually could afford the 425. The good news to that story is that they got the offer accepted because we got the taxes up front, got the pre-approval to 425, the offer came together, even though the listing was like 300, whatever. But that is an important piece to understand what the property taxes are. And some of them are still pretty low with the tax assessments. So I know we don't always have access to that up front, but it is important as you go to present offers, more importantly, when you're going to present the offers, to get the tax bill up front from the selling agent, and then work with your broker or banker and understand that is part of it. Most people, I don't even know if they're doing that out there and the other bankers, but we are, and it's making a difference whether or not we can get the deal qualified for that higher pre-approval amount. So
Yeah, because on a pre-approval, we have to factor in taxes and we have to factor in a base heat cost. And a lot of times, I mean, if I'm pre-approving somebody for 500,000, I have to factor in taxes to be somewhere around 5,500 to 6,000, which is generally not the case. But that's what we have to do on a pre-approval because it very well could be a higher tax depending on the municipality or the area. Like Bridgewater's taxes are super high compared to everywhere else. Well, so are certain parts of Bedford, and so are certain parts of Halifax. Like depending on where you are, we can't always assume that the taxes are going to be a lot lower than the price. But it is a conversation that we always have with our agents, and we say, hey, if your clients are looking to bid on a specific house and they really need to stretch that to the max so that they can get this offer, let us know what the taxes are, and we can work with them and say, hey, they can go up an extra $5,000 or $10,000 or $15,000 based on the fact that the taxes are so much lower than what we have to estimate. So these are really good ways that you can, we never want to stretch a client to the max, but there might be certain situations where it makes sense and they really do need to go to that absolute bottom penny to get that house because it's such an aggressive market, right?
Yeah. No, it is. The other thing we were doing, I don't know, I think it's maybe ran its course a little bit, but we were doing a pre-approval letter for most clients and stating that they were income pre-approved or COVID income approved. And what I mean by that is what we talked about a few minutes ago is around the income. We kind of looked at what they were currently earning and addressing any gaps in the income. And we were doing a pre-approval letter stating that they were, they could qualify up to X amount of dollars and their income was pre-approved as well. But I don't know, maybe some people have caught on to that. And I don't know if that's making a difference, but it's like how I see it now. And when you guys are presenting offers, it's like a resume. How do you make this resume stand out better than the others? And, whether it's, unfortunately, tighter timelines, bigger deposits, it's not always the highest offer, but in terms of the deal structure itself, right, as well. But, obviously we've got the reputation and we're going to work hard to get it approved, but part of it is our relationship with the client of getting this paperwork so we can get it approved as fast as we possibly can.
Yeah, we're pretty, I'm definitely really tight. I don't like to give anybody a pre-approval without seeing documents.
Yeah.
Not saying that buyers lie, but they aren't, maybe they just don't understand what information that we are looking for. So we always like to get all the income up front, down payment up front. It's one thing for a client to think he's on a $60,000 salary, but then he actually sends his paperwork in and he's hourly and he might make 60,000 with overtime. These are stuff we always want to nip in the butt ahead of time. So there's no surprises. When you're putting that offer in, you got confidence that this is going to get approved. It's not one of those things where it's like, ooh, I'm not really sure this client hasn't gotten me any paperwork, right? So we really tell clients, we're like, hey, pre-approval, this is different, between a pre-qualify. You can do a pre-qualify online through a basic calculator and think what you can afford, but we really need to take it a step further and look at these files and know for sure, based on experience, based on the number of files we've seen, to say, hey, you are really pre-approved. This is not just us spitting numbers back and forth at each other and think you can afford this amount. We got to make sure that we're getting everything up front and clients understand that so that they're not disappointed when they send us a document and it's not what they said it was, right? So it's, yeah, go ahead, Dennis.
Oh, I just think that just there's, I know there's 3 of us for sure that's new here, and I don't know about the other ones here, but I think that's very important for anybody just to realize the difference between the pre-approval and the pre-qualifying. And in the market that we're in, A, with COVID, and B, with just the market at Halifax, and that's where we're, that we're in, make sure it's pre-approved and not pre-qualified with your clients. So know the difference, ask the right questions, and that's just kind of a quick little thing to everybody else.
Yeah, I mean, I got an offer on the weekend from a newer agent, not in your office, but it was, they fired the offer to me, and it was 8 a.m. on a Saturday, got on the phone with the client, come to find out it's not even close. Like the client thought, oh, I'm good to go. I got all this money in the bank. But it's like, hey, there's not even close, right? So it's one of those things where it's like, you just can't take the buyers on their word, because they might think they're okay, but they don't really understand how the banks will look at a file and what they use to qualify. So it's really important to get the clients out there and talk to somebody. It doesn't have to be us. Just talk to somebody, not just do it through some online calculator or a quick conversation. It has to be an in-depth pre-approval, right?
Yeah, just having the verbal conversations is so important. I mean, the banks, and Google online mortgages now, and there are probably 25 different sites that you can plug in today and get a digital pre-approval, which means nothing. And people plug in the income, as pointed out, whether it's 60 grand or it's really 45 grand, or there's a car allowance, any number of factors, or there's a commission income or bonus, and people forget about all that stuff. They just think they make 60, but so our job is to figure that out, and doing it on an online calculator. It's funny, the banks are moving towards that. RBC has a great digital one. I'll get pre-approved in a minute. I was like, really? You can't do that. Like online calculators. And just Rocket Mortgage from the US is trying to come into Canada with their 5-minute mortgage program. Well, no idea understanding the analytics of what goes into a mortgage. So it's so you still need the physical person to talk to and understand what these people are really qualified for. So it will save you guys a lot of headaches and pain for sure for the clients. So
yeah, and it's so different. I mean, someone can call you and say, hey, I make a salary of $60,000 a year. Well, that's great, but are you full-time, contract? Are you permanent? Like, what is that? Because contract is completely different than being permanent. And if your letter says that you're on a 1-year contract and it ends in May of 2022, well, then we got problems if you haven't been there for a long time, right? So these are things that we have to, and a lot of jobs are like that, right? CRA, Coast Guard services, certain positions in DND, like teaching, HRCE is a big one. They're typically all on term-to-term contracts. So these are conversations we have to have with them. We do get exceptions to contracts, but it's not a slam dunk. It's not guaranteed that the bank is going to accept a contract that's only good for a year. So these are, if you've been at your job for a few years, no problem. But if you just got hired on 3 weeks ago and it expires in 11 months, well, then we got to figure something out, because they might not love that, right? So it's and clients don't know the difference. They're like, I'm getting a salary. What's the big deal if it's a contract or permanent? So these are all conversations that we vet pretty heavily up front.
Yeah. I didn't have too much more. It went longer than I expected, but we've worked hard for a number of different agents in there and different teams, and we appreciate the business. We're still open for business and available for you guys. And I'm sure if you ask around, we've got a pretty good reputation in there, we hope. So.
Yeah, and just availability. I mean, you can always call, email, text, lean on us for any questions you have, especially as newer agents. Just kind of take advantage of that. And you can call us and say, hey, we're putting this offer together. What's an acceptable timeline? How many days do you need for financing? How many days do you need for closing? And these are really good conversations to have with your broker or your banker, because we could say, hey, Dennis, this is a complicated file. I need 7 to 10 days, right? Or, hey, this one's a slam dunk. Give me 5 days. I can get it done, right? So whatever it depends on the deal, have the conversation with us if you're really trying to tighten those timelines up and be aggressive, I guess, right?
So I might have missed this at the beginning, but what's the name of your business?
So we're Premier Mortgage. So
Okay.
Premier Mortgage is our brokerage, and then Jack and I are the Way Home Group. So it's we're each individual mortgage brokers, but we work together there, and our files are also individual, but they're also joint. So him and I do bounce a lot of stuff off of each other, and it's kind of one of those things where we keep, you know, 2 eyes or 4 eyes on a deal, and it helps us, you know, kind of give the best. If a deal's sticky or if we come into an issue, we get 2 brains working on it sometimes, right? So definitely.
Right. Can you guys provide your contact information?
Definitely. Do you want us to, what's the best way? Do you
Just
want-
throw it in the chat there if you like.
Yep. We'll do that.
Maybe that would work. Would that
Yep.
work for everybody?
I think so.
When yours, Jack.
Oh,
You do
Go
yours.
ahead.
That's awesome. Thanks.
Well, hopefully, yeah, and that's kind of, you know, what we're seeing in the last year. And, you know, it does change week by week, much like the COVID numbers, but we've got a lot of experience, a lot of the clients that we've, you know, brought over the goal line. So we work hard to push it through. So, you know, just reach out. Like he said, accessibility is probably our win with you guys in terms of just bouncing the client scenarios off us. So we're always here.
So I have 2 questions. One's relevant to, I guess they're both kind of relevant, but one's a little bit off the cuff kind of question. But this first one, I'm very slow at, I'm trying to listen and write, and I'm not good at doing that. That's why I love the fact it's recorded. So I'm just gonna go back a little bit. When you put 20% down, which is what we've done in our place here, you put 20% down, we got to pay for the assessment, but it's always gonna be through the bank. That's kind of what you said, correct?
yeah. So when you put 20% down, if an appraisal is required, it's the fee is the cost of the client.
Yeah.
So if they, and if they do a full appraisal, is typically anywhere from 400 to 500. An auto evaluation, if it doesn't need an appraisal, it still triggers like a $99 fee that gets added to the mortgage on closing.
They called ours a drive-by, is what they called it, and charged $300.
Yeah.
So okay.
Yeah.
So
So-
anyway,
And
so
some
that's
banks are different. Some bill it on the back end, some bill it on the front end. We always bill it on the front end because we never want on closing, it's hit, because they don't ever tell you anything. And then closing day comes and you're looking through your mortgage documents and you know you've been charged $300 for a drive-by or whatever it is, right?
Yeah. Yeah.
So, not ideal sometimes.
So then if it's 19, if it's under 20, if it's under 20, who's responsible for that now? CMHC or those types of guys?
CMHC, yeah. It's always, the bank will never want an appraisal themselves. They rely on CMHC. So
Okay.
CMHC is the one that will, if they want an appraisal, they will order it and they'll pay for it and they'll book it. So it kind of comes out of our hands. We can't pick our people. We can't anything.
So that's kind of the benefit of, if you do have a client that has 20% down, you guys can help control that. Okay. The other question I have is, so you guys work at Premier, and I know a couple people over at Premier as well.
Right.
And I guess this always goes back. I've asked this question before, but I don't know if the question got answered the way I was not, I guess, expecting it. And it comes down to watching YouTube videos and watching different guys down in the States. And I don't know how it works, but let's just say you have one of those deals that's just very complicated. It's a business person. There's so many moving parts and assets and this and that. Is there, like, what's the difference? Like, you two at Premier versus somebody else I know at Premier versus someone else at another company. Do different brokers, are you guys able to accomplish the goals differently? Like, will you guys look at it? Is there some allowance there for, like, nah, I think this is going to work, like risk taking, I guess? Or is it just everybody's like, here's numbers, you punch it in, send it off?
No, it's a good question. I mean, the biggest thing that I guess separates Jack and I is experience.
Experience.
So
Yeah.
it's number of volume that we do, and it's a number of units that we do. Like, we're number one. We're both of us together. We're top
Number
three.
one. He's number one. He beat me this year.
But it comes down to just seeing volume, right? It's seeing so many different applications and so many different types of files that we can get stuff done that other brokers can't get done. And I guess that's where we kind of lean on it, where we get deals. A lot of deals come from other brokers that they couldn't get it done, but we can get it done because we know a certain bank's policy that we know we can make it work and fit through. I mean, and we also have, due to the volume we do, we also have some dedicated underwriters with certain banks that really help us leverage potential exceptions that other people might not be able to get. So we look at it and we're like, hey, I can definitely get this deal done because I've gotten this exception done multiple times before, right? where someone else might look at it and they have no relationship with that bank and they're like, nah, this is not going to get done because I've never gotten it done, right? So it really just comes down to experience is the biggest thing, but just seeing the amount of volume that we see. We've seen pretty well every situation. You always will learn and we'll always see new things that we've never seen before. We get surprised sometimes with some of the stuff that we do see, but it's just knowing how to position the deal and having the relationships with the banks and the lenders that not every broker, because like, for example, for Scotiabank, you have to produce a certain amount of millions in volume to be on a certain team. And when you're on that team, you get a dedicated underwriter, you get someone who will work a file maybe better than someone random sitting in Toronto, right? So there's a lot of advantages with potentially what we have that other people might not have, right?
And I can speak personally to that with Jack, and I'm sure you guys were working together at the time. Jack was really, really busy and was able to help us. I think it's the proactive approach that you take to make sure that there isn't any challenges that are going to pop up. You know, you guys do take a lot of that proactive approach, and you have a process that actually works. And I mean, it's been many, many years, and you know, we still hear from Jack or get something in the mail from Jack. So there's still that personal relationship, and Jack was able to get stuff done, right? And so I'll say firsthand that that you're in good hands. I guess my question would be, being so great at what you do, being in the business so long, having the internal partnerships and having the confidence to get things done. Are you too busy to take on more, or are you expanding, or do you have room for these new reps that are all coming in? This type of stuff, right?
It's a funny question because Jack we always joke because I mean, we always got time for new business.
Right.
And it's one of those things where it's, you know, we'll work 14, 15, 16 hours a day for a new business. So as long as, you know, for us, it's business on our end is all referrals and it's all relationships. We don't advertise. I don't advertise, Jack. We don't really pay for any kind of advertising. So for us, it's word of mouth and agents. So once we build a relationship with the agents, for us, it's okay, well, these are who we rely on for our business and who we help to help their business, right? So we always have time for new clients, phone calls. We do have some back-end processes that do help us, allow us to keep doing more business and more volume, because the goal is every year to do more volume than last year. But it's making sure we're not doing it to a point where we never want to do more business in the, I guess, in sacrifice our process or sacrifice our communication. So we've put stuff into place to make sure that doesn't get affected while still being able to do more business. And Jack has a great
Maintaining that brand. Yeah, that's important.
I wish I'd done it sooner, years ago, but for sure I've got great support people behind me. You know, it's just not him and I in the front. There are people that are
people that you'll never know or hear from in the back end that do a lot of the stuff, but we just never want to pass stuff off to other people because we always want to be front and center. But there's a lot of stuff on the back end that people will never see that helps us with our process for sure, right?
Yeah, no, it's been good. It's been good. We're always, like I said, available for that, and there's always situations like it's 17 years that I've been in the business. I may look at but yeah, no, I've seen so many transactions experienced, and just based on that, we've got a little bit of a network as well that we interact with some of our other top supporters within Halifax and surrounding area that we, you know, if we're stuck, then we'll lean on some of the partnerships that we have within some of the other top brokers. So, you know, much like you guys would if you got a mentor, but we're pretty close to the people that we work with within the team, and you know, there's thousands and thousands of transactions. So somebody's has seen a certain deal a certain way, so we can rely on that. And it's been like I said, those relationships with those lenders, and we don't always, we have 5 or 6 key lenders, and we know them inside and out. We've got those solid relationships with them, and that we depend on them as much as they depend on us. So,
and a lot of time too, I mean, we treat it like a business, not a commission check. So if we have to let a client go, that's fine. If we can give client free advice, if we can put a deal together, a lot of times we don't work with certain banks that just don't work with brokers, but we have good relationships with people at those banks. So for example, RBC is not a bank we work with, but we have good relationships with some specialists there. So if I know I can't do a deal, but I know the deal can get done over there, I'm handing them off a complete full package on a silver platter and say, hey, here's a deal that works great for you guys. And we're not getting anything in return, but we are servicing our relationship with the realtors, making sure the clients are still happy. And it's not like, oh, sorry guys, we can't do anything for you. Go to your own bank. See you later. There's got to be some kind of a handoff. So we do try to make sure that if we can't get the deal done for whatever reason, we're passing it off in a way that makes the client feel like we work with that bank, but we don't. But here's this person at RBC that can get this done, but we can't. But you don't have to do any additional work on your end, right?
Yeah.
I think that's it.
That's it.
Jack, anything else?
That's all I had. No, thanks for your time out. I know, like you said, everybody's busy, and you guys took time out of your day to join us, and we've been trying to get these sessions out there, and because people just don't know, and some great questions from your side. And I didn't plug you to say that, but I appreciate your feedback. It's nice to hear.
It's awesome. Thank you, Jack and Cyrus. Just quick question. What's your correct phone number, Jack? Is it 5225 or 2225?
I put it in, I inverted the numbers.
So it is
5225.
It is 5225? Okay, great.
Don't call the other one. You just get Pete's off the other number.
That'd be fine too, but it wouldn't get my deal together.
Right.
Yeah. Thank you. Thank you both.
Using
This
a
was great.
different keyboard, so I apologize.
Oh, no worries. We got it clarified. It's all good. Thanks so much.
Yeah, this was really wonderful. Thank you.
No worries.
Call, text, email, whenever you guys need help or questions, we're always connected. So weekends, evenings, let's have our phone on us.
You sound like us now.
Yeah.
Yeah. I had a full head of hair when I got in the business.
Damn.
Not
Don't say
anymore.
that.
Gone.
That is concerning. I kind of like my hair.
Yeah, definitely.
All right. Thanks, guys.
Have a great day, everyone. Thank
Thanks
you.
so
I
much.
thank you.
Bye.
Thanks, guys.
Yeah.